First of all, thank you everyone for joining our webinar. As I'm sure you're all aware, it's how you're looking to get 7% assured rental yield with UK property. And it really is a fantastic opportunity we've got here that we're going through. My name's Sam Daines. I'm the Senior Associate here at Holborn Assets. And I have a lovely guest speaker who is Lauren Ireland. She's the Director of Lollipop Investments. And she's here to discuss the opportunity with you. Before I pass over, I'm sure a lot of you know a little bit about Holborn, but just to briefly let you know, as people are coming in, we do all areas of finance here. We do everything from investments to pensions to residency to insurances, mortgages, but today really is about property and a sort of fantastic opportunity that we have here available. Obviously, we're all aware that diversification in terms of investment is so important, and obviously property is such an important part of that. But it's really key to get the right property in the right areas, and that really is what Lauren sort of specialises in. Here at Holborn, we always look at what the best developments are. We do due diligence. We can appoint solicitors. We can arrange mortgages. We can tenant property. We can look after property. But first and foremost, it is about finding the right property. So really, this is what today's about. And I'm sure by the time you've watched this, you've had a look through and heard what Lauren's got to say, you'd agree with this. So I'll pass you over to Lauren. If, as we're going through, anybody has any questions, please fire them away. I will interrupt Lauren. She said that's okay. But obviously you want it to be interactive if you have any questions, or if you want to say it to the end, that's fine as well. So with no further ado, let me pass you over to Lauren. Lauren, thank you so much for joining us. It's a pleasure to have you here.
Thanks, Sam. Thanks. It's really nice to be back. And like you say, it is really an exciting opportunity. As a property person for the last 20 years, when I talk to investors, one of my first questions is usually, are you after a cash flow, a yield proposition, or are you after capital growth? Because you don't often get both in a really viable city, but because of certain dynamics within the city and supply constraints, we've got an amazing combination. So it's almost like a perfect storm in the city of York. So what we've seen in the last few years, probably up to 10 years, you've seen the same cities being advertised, regional cities with an investment case that's strong, but is surrounding where people need to be based, because that's commercially where they need to live, to work, but it's not necessarily somewhere where people desire to live long term. And because of the pandemic and people's sort of drive towards happiness and health and well-being and where do I want to place my family now, we've seen a huge shift of people moving towards the likes of this city. So what we've got is more of an aspirational type location. It's a beautiful city. It's quite affluent. And it's more along the likes of a Bath or Oxford or Cambridge, as opposed to sort of those larger cities such as Manchester and Birmingham and the likes. So I've got some really good reasons as to why York is a great investment. And I'm going to go through some slides now to run you through that. So first of all, it's an award-winning city. So when a big hitter like the Sunday Times says this is our #1 place to live in the UK, it's not a finger in the air. It is a huge set of economic data alongside affluence and safety and all these things, which means they can actually make that award. And York always features in the top sections of the awards lists. They're in the 11th year now. The only reason that they're not #1 now is because York has become quite affluent. So you'll see it's less affordable than some of its neighbouring cities. And in talking about affluence, these are some figures released by Savills just under 2 weeks ago. And this is about the drive of people sort of money movement throughout the country. So out of 333 boroughs in England, York features as #10 in terms of people moving towards the city and into the city of York. So it's really up there where people want to be and live when they've got the affordability to do so. So location and connectivity. Its location is one of its most important things. It was important back to the Romans and the Viking days. It's also very important now. It's equidistant between Edinburgh and London, so that's only an hour and 45 minutes on a train, direct train from London. So you see a lot more people these days commuting for 1 or 2 days a week, but living somewhere beautiful like York. In terms of connectivity, this is quite an important thing then, I think probably more so in the last few years. How quickly do we connect to the outside world? It's the UK's first gigabit city, which means that every single location within the city of York connects to the world 100 times faster than UK average. So that's really important when we look at the type of businesses that want to set up in the city. So you'll find it very techy, and a lot of those types of companies have made that York their home there. It's 23 minutes down the road from Leeds, which is also quite important. It's a very big hub commercially, but not as nice a city to live in. So if you are familiar with London, you might have to live, you might have to work in the city of London or Canary Wharf, but you don't necessarily want to live right in London. You'll jump on a train for 20 minutes and you'll go to Hertfordshire or Kent or Surrey or Essex. And that's sort of what we have in Leeds here. It's very well connected through the airport at Leeds as well. And there's a really big, nice expansion underway at York Central train station. So bigger and bettering the city for connectivity as well. Supply and demand. So this is a really important slide for investors, because in a lot of cases, when you see pipeline, we call it pipeline, and future investment, that's when you naturally see these movements in your growth. So what we have in this city are constraints in terms of supply. So it's a walled city, it's low rise only, nothing can be built higher than the Minster. And because of this change in dynamic and where people are moving to, what it's done to already sort of one of the worst housing supply shortages in the UK has only compounded that. So what we see in future growth is not a massive pipeline, and it's only future growth. So that's really, really nice to know that when you're investing in a city, you're not 4 or 5 years down the track going to see a drop in your growth rate there. Safety. So this is a really important aspect of a city, and for you and I, who probably won't ever live in York, we want to make sure that when we invest in a city, there's going to be people that want to live there and tenants that want to be in the city. So against a national crime rate, which is 96.4 incidents per 1,000 people, York has a third of that. So they're the police statistics. It's backed up by, the fact that when you go there, you don't feel that you're unsafe. So it's voted safest by TripAdvisor as well, in terms of the city where you feel the safest walking through. And then you want to think about the safety of your investment as investors. So when you couple the consistent growth and those high occupancy rates, you develop some sort of resilience to national house price movements, which we see in the UK every 7 to 10 years. History and tourism. So who doesn't want to visit a historical city? And York certainly is that. It's one of the most historical cities in the UK. It's the third most visited city in the UK, and that's only behind London and Edinburgh. So what we have is a huge amount of tourism going through the city, 8.4 million visitors per annum, and a huge staycation market. So a really, really strong domestic market, which means through the pandemic, when we didn't see overseas tourists arriving, the city was still full, and it was amazing. And what it's done is actually support hotel business and actually made it thrive even more. So really, really good, and a lot of strength and depth in the city, in that market as well. Got lots of cobbled streets, gastronomy, tea houses, coffee shops, restaurants, bars. A really nice feeling city. It feels very British when you come there, so you can see why tourists want to.
And Lauren, I've read some interesting fact on here. I believe that picture top left, I might be wrong here, the Harry Potter, Diagon Alley in Harry Potter was actually, for the film set, was actually modelled on that. I believe it's called the Shambles. I think it's about 10 minutes away from the development. But
yeah,
you'll see how it looks similar, but it was based on that street, I believe, top left. So
there's a lot of those. Yeah, there's a lot of those streets, and I think the city is being used a lot for filming because it's quintessentially British, and it doesn't have these imposing 20-30 story high-rise buildings that make a lot of cities quite ugly, so to speak. So there's, because of the restraints on those types of development, we're retaining the focus and the feel of that nice English city. Absolutely. So education is really big in York. So you've got two major universities specializing in biotech and science, and they compete with Oxford and Cambridge, and their specialties are like malaria and cancer research. So you'll see a lot of the students that go to university in the city, they've discovered a beautiful city, They get embedded in the science sector that's thriving there, and they join a lot of these businesses that have been set up in the city off the back of it. It's also home to St. Peter's, which is the #1 secondary school in the UK. So a lot of obviously families that can send their children to a school like that will discover and know York through the process. So commercially, not everybody knows about York, but it's actually one of the largest economies in the UK. So to put it into context, the GDP of York is equivalent or greater to 11 of the EU countries. So a huge amount of commerce going through the city. Like I say, the world leading health and bioscience sectors. It's the UK's founding science city. So the UK government has been injecting money every year for 30, 40 years into the city. And that's why it's so great where it is today. So there's a lot of depth with the commerce. You've got a really low unemployment rate. A lot of people are double or triple educated. So you've got high earnings as well in the city. And with only 200,000 residents, you've got 7,500 businesses. So really nice, strong amount of depth in terms of commerce. These are the 5-year forecasts from Savills. So what we have is the highest rate of growth alongside the Northwest, which is really nice and strong. That slide, when I looked at it middle of last year, was 28.8%. And sure enough, we had 9.7% growth in 2021, according to the Halifax. So we're still, because of the constraints on supply, it's quite easy to predict where it's going. So really nice, strong figures there. But to extrapolate it a little bit for you, these are obviously key figures. So London, we're looking at 5.6% in the next 5 years. So pretty much out of reach or not really of interest to a lot of investors, unless you are, the affordability level is 2.5, 3 million, and you're looking in prime central London, which is where you're going to see 20, 25% growth. But that always happens in these peaks and troughs. UK wide, we're looking at 13.1%, and Yorkshire, like I say, really nice, strong growth there at 18.8%. So this is the development while we're here. It's called the Gasworks. It is the most luxurious, it's the biggest, and quite frankly, it's the best development that exists in York. What the developer's trying to do is better the city all the time, and that's what we've got here. It's got loads of outside green space, which when they went in for planning, I don't think they realized how important that was, but that's why it's been so successful. And I think with that sort of health and wellness lifestyle, people want to see greenery. They don't want to see another building next door to them. And the 4-story low rise along with the rest of the city is a really nice way to do that. It's got high specification, like I mentioned. It's a very techie city, so this development goes along with that. Short lets are permitted on the head lease. Our prices are from 230 and they go up to 1.1 million. So I think we've got about 5 of those units left at 230. Our 1 beds are hovering around 300, 2 beds starting at around 400, and the 3 beds about 650, 700. So a nice array of sizes there. So depending on what people's equity levels are and appetite, we can find a unit for pretty much anyone. And our completions are March next year. So this is a map of the city. York is not a large city. You can walk around that city wall, and you can walk the entire length of the wall in about an hour and a half. But walking across the city from one side of the other to the other is around 20, 25 minutes. So where we are is in Heworth, on Heworth Green, just 5-6 minutes walk from one of the access points to the city, and you've only got 4 gates that allow you access to that central area. So if people are comparing to a city like, say, London, probably most well known, it's more like in Islington or Hampstead. You've got a golf course, you've got tennis courts, golf club and tennis courts, you've got coffee shops. It's got that nice sort of greenery feel, but it's only 6 minutes walk into that central area. So it's really nicely placed where we are. To give you a bit more detail, here, let me find my arrow. Our site is here where that gas cylinder is, and that gas cylinder is now removed. This Google Earth is not live, as most people will know, but the remedial works are all but done, bar 1 pipe that NGN need to remove, and then the build commences on site. It's only a 60-week build as it's low rise, so it's all nicely on time there. And what we have, where's my arrow gone? Down in this right-hand corner is the old moat, and you can see the access point to the city wall. York Minster in the centre here. And this journey, what we have, so this would be your tenant's journey into the city, which is probably where most people will be working. It's a row of Victorian and Georgian houses. The values there range from 900,000 to 1.5 million, so quite a high price point for a northern city, but for York, that's quite commonplace because of the type of city we're dealing with. So this is a site plan. We've got 5 buildings, all 4 stories high. Zone C, you'll have an acre of green space in the front of it and an edible garden on the side. There's a lot of greenery around it. Clayton and Drake here, where you'll see a lot of the sort of the smaller units, have a raised garden for access by the residents, which is really, really nice. So some people want to be able to choose certain views, so I can help people select those. But it's a really nicely laid out development. And it offers amenities that where we are based, or where the investors may be based, are quite commonplace. But for York, it's not really been offered before. So they're trying to create this sort of community type feel, flexible workspaces, private dining rooms, landscaped and edible garden. Like I say, there's a small photo of it here. Cycling tracks. It's a really eco-friendly development, but it's an eco city as well. So there's a lot of walking and cycle tracks around the city. And then you have a car and cycle club on site. Curate, so this is the digital system, the application that's been developed for our development, the gasworks. So it's basically something that can help your tenants run their lives at the gasworks. They can liaise with concierge, make bookings, have deliveries arranged, pay their bills, pay their rent. And there's affiliate type marketing that goes through the website. So across the city, when people use the app, it obviously generates more business and brings people together. They'll get discounts for using it. And then for investors, which is probably more important for you, it's a nice way to look in on your investment from afar, and you're not just receiving a letting statement at the end of every month and you don't really know when money's going in and out and what it's being paid for. So you can give your access details for this app to your lettings agent as well. But it's also got yield appreciation tools. So it's a nice way of keeping an eye on your investment and what's going on in the city at the same time. So rentals, the buy to let, so long lets in the city, you're going to be achieving around 5 to 5.5% in terms of return. So nice, really strong yields there. But where we see an enhanced yield is this short-term letting market. So you saw the figures surrounding tourism, and what we have in the city is only 52 hotels, and most of them are between 50 and 100 rooms each. So if you're thinking about 8.4 million visitors coming to the city every year and only 4,500 hotel rooms, you can see there's a massive imbalance there. So what the city needs to provide is short-term lets. So the developer is allowing short-term lets on this development, but for lending purposes, lenders don't like short-term lets because there are occupancy shortfalls, and they want that security every month of knowing you've got a tenant with a contract paying that rent. So that's not, that 12 to 14% gross yield is not really accessible to people unless they're buying with cash. So what you need is a company tenant who can actually access that market. And that's what Croft Living are. So these guys are service department operators. You saw the yields they'll be going out to market with. It's quite easy to achieve 125 to 150 for a 1-bedroom apartment per night in the city of York. So they will be renting it out, Airbnb type platform, and booking.com and the likes of that. And they'll pay you back 7% net yield to take your unit off your hands from the day one of completion. So you have no void period. You don't have to worry about completing at the same time as everyone else, where you naturally see that sort of drop in your expected yield because everyone's fighting for the same tenants at the same time and concerned about that first mortgage payment. What we've got is Croft, who will sign up to take it off your hands for 5 years. So you can park it, not think about it, very hands off, and they will hand it back to you after 5 years. There's a 3-year break clause, which is UK regulation. So that's a mutual break clause, which means you can exit the agreement at that point. They could, technically, they won't, because it's a very strong, it's a good business. And in the city of York, which is very tourism based, they're not going to want to do that. But it's a really nice, strong net yield that you have there, combined with the growth that we discussed at 18.8% over 5 years. So North Star, these guys are Yorkshiremen. They've been developing in the city in all aspects for a long time. What they've done most recently is they've completed on Mount Mason Hotel. So they do commercial and residential. They've done Micklegate in the photo there and the Crescent.
Right. Sorry to interrupt. The question just popped on here. Can you carry it on after the 5 years? Did it say on there you can carry it on after the 5 years?
Yeah, so you would renegotiate with Croft at that point. Given the trajectory in the city, you're going to get a better rate probably at that point. And I think as time goes on, obviously their margins are getting bigger as well, so they're going to have the affordability to obviously offer more. But you don't have to commit with Croft after 5 years. You don't have to commit after 3 years. You could exit the agreement if you wanted, but I think it's a really strong offer there. There are other operators in the city that you could go to at that point as well.
Right. Perfect, thank you.
Yeah, so North Star, as I mentioned, these guys have been building and developing for a long time. Their big residential project at the moment is the gasworks, which is what we're dealing with, and they've also got the master plan for the Roman Quarter, which is an amazing undertaking. It's like the Mayfair of York, and a 650 mixed use scheme, which is going to be great. The prices are almost double what we're looking at in the gasworks, and that will be completing in 25-26. So what these guys are doing is bettering the city all the time. They work really well with the local authorities in regenerating areas, high streets, and buying old buildings and redeveloping, and that's why York has become so affluent, I think, because of this sort of consistent approach to bettering it all the time from the likes of these developers. So it's really, the process is really easy to reserve. It's only £2,000, and that's when the lawyers get involved. And then after 4 to 6 weeks, you'll exchange on 20%, and then your completion is 80%. We've got a really nice long lease at 250 years. Ground rent is capped at £250 per annum. And the service charge is nice and low there at £267 per square foot. So you're looking for a one bed, probably around £1,200 a year on service charge. So it's really nice and low considering what you're getting. But if you accept Croft's offer, and not everyone has done that, some people want to access the market themselves and go for the higher gross income, Croft will be paying your service charges. So that's included. So your net cash flow is only going to be affected slightly by your ground rent, your tax position, and your interest rate. So this is an illustration on 5 years of the entry price units at 230. So for overseas investors, we've got a 70% loan to value. Holborn mortgage brokers have done all the due diligence, weeks of due diligence, which is really nice. So there's a nice panel of lenders that have been selected there. At the moment, those rates are coming in around 3.25. But what we've done is make these illustrations and cash flows conservative around 4%. We know there's going to be inflation. We know there might be interest rate rises before completion. So the 4% is still a nice conservative figure. So that entry on this unit, and this is the total equity required. So this is split over exchange and completion. So you don't have to come up with this full amount now. It's around half of that. So after 60 months of £806 a month is what you get into your pocket after the interest rate comes out. So that's true cash flow into your pocket. And then this is the capital growth we've talked about that Savills predicted. So after 5 years, you're looking at around 106% cash on cash on that initial investment. So I've got a cash flow here as well. This is an example. We've got cash flows for all the units, all the price points. So just to sort of break it down, the initial costs are here, reservation fee, your 20% on exchange. The developer's currently giving a legal contribution of £995. So there's only a shortfall of £305 with the lawyers, which is nice at the moment. And so your entry to this unit will be around £46,500, which you'd come up with in the next sort of 6 weeks, slightly longer if we negotiate that at the front end with the developer. And then to complete end of Q1 next year, you come up with another 40,000, and that's what you need to access this investment. And that completion cost there includes your stamp duty as being non-dom investors. So it's all included. We've obviously got a zero income there on the service charge and tenant fee because that's included by Croft. So that is a true 806 per month for 60 months. Like I mentioned, I like this photo. That's why I usually just end with it. It gives you a nice sort of idea of the low rise of the city. Like I mentioned before, you can't build higher than the Minster. and there's lots of green open space. It's a eco-friendly development. There's solar panels on the roofs, and there's a cycle space for every single resident underneath in the car park of the building. So they're doing a really nice job there. What do you think, Sam?
It looks fantastic. And I've just got a question pop up here as well, Lauren. In terms of where somebody's based, I know we're basing this on overseas residents, but presumably if somebody's in the UK, would the interest rates on the mortgage be any different than what we've got for our overseas investors? Yeah,
that's a really good question. I'm buying one of these, as are several people that I know, and the interest rate I've been quoted is 1.75%, so not 4%. And a 75% LTV. So your cash flows are obviously a lot stronger if you're from the UK. You obviously don't pay the extra stamp duty. So the cash flows are very nice. And obviously getting your return after 5 years is looking more like 150% on initial outlay if you're in the UK. But it's strong either way, to be honest.
Yeah, it's fantastic. So again, you've kind of touched on this, but just to sort of clarify, the process if somebody was interested, then you've got you put your 2,000 down initially, and then the process, how long after that would the remainder? I know we sort of mentioned it's going to be around 46.5, but what's the sort of the breakdown of that, if you like?
Yeah, so at exchange, so once all the legal work's done, and that usually takes 4 to 6 weeks, that's when you come up with the balance. So it's 20% minus that initial £2,000 at exchange, and then obviously the remainders and the balance doesn't come till completion.
Yeah, okay, perfect. And I don't know if you've mentioned this, the HS2, is that coming near York?
HS2 wasn't ever going to York, it was going to Leeds.
Right, okay.
And no, that's been quashed. That's not going anywhere. That's not going to Leeds anymore. But it was never going to York anyway.
Oh, okay, so it doesn't affect it. Okay.
So it's not really going to affect us.
The thing is, a lot of people we speak to, certainly when I speak to a lot of people about property, and it's all this head and heart type thing. You know, people sort of, when you're looking to buy investments, it tends to be, would you live there yourself? Are you buying it for yourself? Sometimes you have to change that philosophy. However, I will say, probably similar to you buying one of these, it kind of ticks both boxes, because when I'm looking at this, I kind of feel that it's something you would buy to live in yourself as well as something you buy directly.
Yeah. Well, this is it, isn't it? It's like the head heart thing is very important. I think a lot of investors just look at a city and where's the growth, and it could be an ugly high-rise building, really high service charges, but you're in a city like London historically, which had amazing growth. So even if you were investing in London and you got 3 or 4% return on your yield, you'd be fine because you'd have capital growth, but that's just not the case in a lot of these big cities anymore. So it is you get to have both with this one. You get to have head and heart. I mean, if anyone's visited the city of York, it is an affluent, beautiful city where you can see yourself settling down. And the main thing is, I mean, I don't think I'll ever live in York, but I want to make sure that tenants always want to go there and rent my flat.
No, absolutely. And it reminds me, I'm from the UK, from more sort of southwest near Bath, and I think you touched on it before. It does remind me of what Bath is like down where, you know, where I'm from. So it is lovely. I love the history about it. But no, it looks fantastic, and I just said there's no more questions coming up, Lauren. But what we're going to do, as we know, is going to post this on our website, so obviously people can rewatch it. I'm also going to send it out, but obviously for anybody that's watching, really it's a matter of contacting us if you want more information. Because I know you're around, you're happy to go through more individual situations with people, should they say wish. Is that right, Lauren?
Yeah, I can help people select units. It's always nice to have a one-on-one afterwards with the clients, because a lot of people see my presentations, but might not want to ask a question. And I think just having that one-on-one and backwards and forwards with an actual person is nice. So I'm happy to jump on Zooms and do that, no problem.
Yeah, so for anybody watching, if you want to contact, obviously you can contact me on LinkedIn, on Facebook. You can email at sam.daines@holbornassets.com. You can obviously find our details on the webpage. But the main thing is, if anybody's looking at this and even just want to go into a little bit more detail, more like your personal situation, and as Lauren said, she's more than happy to jump on. I could jump on the call, but initially make contact with us, because I really think, as I say, with the properties we deal with a whole one, there's lots of good ones out there. For me, I think when we went through this one really stands out. And again, I'm sort of not necessarily expert in this field, but I can't help but think that's probably not going to be around too long based on what you're saying.
That's a very good point. So Croft are assessing their numbers, and this offer they've told me is around for about the next month, because they want a certain number of units to operate in the development. The developer is also paying for furniture packs, which is really nice, because at completion for a 1-bedroom, for example, the cost of the furniture pack that Croft will require in there, because they want their units to look like a business, it's luxury hotel style, are around £5,000. So what the developer at the moment is doing as an incentive is offering to pay those. So that's a completion cost our investors don't have to pay. And then, like I mentioned on the cash flow, they're also paying 995 towards the legals. So it's a really nice time to buy. And also, before Croft adjust their margins, we might be looking at a 6% in a few months. But right now they're still happy to offer the 7%.
Yeah, and it's important to know, obviously we sort of help with all aspects of this as well, so you've got all them benefits, but you know, if it's looking for mortgages, sorting that out, then obviously we can help with regards to that, solicitors, all that sort of side of things. So it's really, as I say, a fantastic opportunity. But yeah, no, thanks so much for going through that, Lauren. Obviously we'll be in contact, we'll let you know who sort of inquired in, but for anybody who's watching, please contact us, because it's one of them opportunities you don't want to go and realise you missed out on it. And I think, as I say, Lauren herself's buying one here, so I can't say bigger testament that is to the development than that. So yeah, so please contact us, anybody who's seen this, and yeah, we'll look forward to speaking to you. But thanks, Lauren, so much for joining us.
You're welcome.
It's been an absolute pleasure.
Nice to see you. Thanks, guys.
You too.
Bye-bye.
Take care.